All right, guys, good morning. It is 8:50 a.m. on Wednesday, August 7th, 2019. Hope everybody's doing well. I just want to make a quick follow-up on the video I made last night regarding the New Zealand dollar, the RBNZ cash rate, and statement. So we had pretty exciting there. The RBNZ had a surprise 50 basis point cut. So if you watched the video from last night, and if you did any reading about this leading into it, the market was expecting a 25-point cut. And as I said last night, and then the question was going to be, what did the forward guidance say? What did they think was going to happen next? And based on that is where I thought the market would go. But lo and behold, they had a cut of 50 points, which was not really expected. Very few people were expecting a cut of this size. And so that caught the market by surprise. And the Kiwi really took off to the downside, obviously, as soon as that came out. The RBNZ also suggested that there's a 1 in 3 chance of another 25 basis point cut before year end. People are thinking maybe at the November meeting. They will be meeting again next month, but they're not expected to. There's only about a 25% chance a chance of a cut in September. So obviously, that definitely puts a more bearish fundamental outlook on the Kiwi. And so if we look at the charts here, we can see across the board, this was the news right here. And obviously all the Kiwi pairs look like this. Okay, so no surprise. And then go to the cross, the Euro Kiwi, of course, went up. So, and here's where we stand now with all of these. They've all pulled back. So here's the Euro Kiwi has pulled back. This was the initial news, and then the next hour, this is the hourly charts. This was the initial news last night. Then we pushed up for another hour, and then since then we've been pulling back. And again, it's pretty much like that across the board. This was the initial move down. We pulled back, went pushed down again. Now we're pushing back up again. So I think these are just corrections. Fundamentally, there's no reason to really buy the Kiwi. This is the Kiwi Canadian, which is up a little bit more because the Canadian dollar is being hit hard right now because of dropping oil prices. So, but they pretty much all look this way, where they've all pared back their losses. But I think these are just corrections, dead cat bounces. If you look out a little bit here, this is the weekly chart. I don't trade off this, but it's good to get a longer term view. So this is the Kiwi Swiss, for example. We can see it's broken, through these support areas right here, over here, all right, and heading down. We'll get a lot of room to play with down here. So, so while it never happens in a straight line, I do think that we'll continue to see weakness in the Kiwi, and probably over the next few months here, I would guess. So I would look to sell the Kiwi on any bounces. And of course, if the trade talks between China and the U.S. Continue to not go so well, then that's also going to put pressure on the Kiwi too. And especially with Kiwi yen, because the yen will be a nice flight to safety during these risk-off sentiment, and that combined with the weakness in the Kiwi, I think the Kiwi yen is a nice pair to keep an eye on. And here we are on the weekly of the Kiwi yen. And again, we've broken through some support levels here, so there's definitely room to the downside. We're obviously under the 200 EMA, and from the standpoint of an Elliott wave pattern, we're probably in, again, this is just a correction to a downtrend. So, so this is probably like a 1, 2, 3, 4, 5. We'll go down, maybe retest this low, then we'll probably bounce again, and then who knows after that? We'll probably come back up and then sell off again. So anyway, so that just leads me to what I just said a minute ago, that basically Unless something dramatically changes, then I would just be looking to only short the Kiwi dollar in the long term. In the short term, you might be able to play some corrective bounces, but just understand that it's really fundamentally, weakened right now. So anyways, guys, so that's really it. Surprise move to the downside, and the RBNZ statement basically was really kind of weird because they had good employment numbers the day before yesterday came out, and they were talking about really strong employment figures and some other metrics that were pretty good, but yet they pulled this surprise 50-point move. So it's a little bit um, opposite of what you would have thought based on some of their recent numbers, and even based on some of their words in their statement. But at the same time, they still feel that things are tilted to the downside, so they still have concerns about longer term in their economy versus just the short term. And so, whatever reason, they felt like they needed to make a bigger cut. So, and we'll see what that means going forward. So, anyways, guys, just wanted to post that. So hopefully you took advantage and grabbed some pips from that. Although that move happened so quick, unless you were already in it, you missed it really. I did have a couple of small positions on, which I've taken off for now. I did take some profit out of that, but I'm going to wait until these corrections play out, and then I'll look to get back in. So, but definitely looking to short the Kiwi going forward here, just based on that fundamental outlook and based on such a deep cut. I think the big money is going to be on the short side of the Kiwi here going forward, at least for a while. So that's it, guys. Hope that helps. Again, please like the video, share, comment, like the channel here on YouTube, hit the bell to subscribe if you're just finding it for the first time, and look forward to some conversation. All right, guys, talk to you all soon. Hope everybody has a wonderful day.